It's kind of a high-stakes game, and if Nikki Newton-King sort of appears behind me this evening, do warn me, because for years the JSE has had no competitor. The bond exchange was around for a while, and then, of course, the Goliath bourse, the place where I'm seated, bought it out. This is Tonight. I'm Bruce Whitfield. Tonight, I'm joined by the ZARX Chief Executive, or ZARX Chief Executive, Etienne Nel, who's planning to change that. ZARX, you sound like Kenny Cornelius' nightclub. What is it? How do you pronounce it?
Bruce, hopefully we're not perceived as a nightclub. You got it right the first time round. It is ZARX. It basically speaks to the South African currency, the three-letter code that is used universally for the SA Rand being ZAR, and X referring to the exchange.
Okay, so you want to launch a rival exchange. The last 15 years, ever since the emergence of the internet, we've been told of plan after plan after plan, almost as many plans as to airlines that have never got off the ground. People have been talking about starting up alternative exchanges. How are you going to succeed?
Bruce, I think our application is quite strong on a number of fronts. Firstly, the team we've assembled have a very good track record, which speaks to fit and proper requirements that the Financial Markets Act has in terms of running an exchange. So typically you wouldn't phone me to fix your plumbing problems, but having run OTC markets for the past 10 years, I do know a thing or two about running call it a market, albeit unregulated, and following FSB's pressure from last year to regulate the OTC market in a more structured fashion, which we obviously welcome, we took the decision to apply for this exchange license.
So now, is this the idea with this exchange license now, to take everything that trades OTC now and pop it onto this alternative exchange to the JSE?
Bruce, in broad terms, that is the business plan of ZARX. Obviously, the underlying companies can choose what they wish to do and how they wish to handle their share trading affairs. And it's been interesting to see how the market's played out. And what's happened is quite a number of companies that wish to merely have liquidity in their shares have come to the fore and approached us and said, guys, if you are successful in this application, we'd like to list on your exchange.
Where are you in the application process?
In broad strokes, there are 4 steps. Firstly, you need to submit your application, which we did on the 27th of March this year.
Right.
And then the FSB consider your application, and it's an iterative process. So they'll come back with questions and we respond with clarifying answers. Once there's a level of comfort from the FSB, they then say, right, we understand where this applicant's going, and invite comments on the rules and the regulations and listing requirements of the exchange. Step 2, and that's where we are right now. So we're actually quite far down the line. The documents need to be open to public inspection for about a month. So that terminates around the 3rd of August. Thereafter, the FSB would consider the input and then do a proposal to what's called the licensing committee. And the licensing committee... By
September, October, you should be in a position where you can hit a button and go live, theoretically.
Well, we're hoping that we should have an indication of whether or not we're successful with the license. But then, obviously, we'll get a conditional approval, and certain boxes need to be ticked after that, like systems need to be audited and so on. And we're probably, at the very earliest, December. In all reality, maybe early next year.
Do you have the technology in place?
Yes,
if you got a permission today to grant, if you were granted this license today, could you be up and running within a week?
No, you can't.
Okay.
Simply because the systems and processes need to be audited. So auditors have to come in.
But assuming that you got all those sort of that
preemptively,
the PR job, the sort of the technical stuff done.
Yes.
Your systems are good enough and robust enough to withstand trading activity using an online platform.
Correct. We went with a service provider that's got a complete solution and actually is used by a number of exchanges throughout the world.
Minor exchanges, smaller exchanges, like what you're proposing?
Actually, no. We would probably be their smallest client. So,
okay.
Yeah, it's fairly robust.
What is the best case scenario come January next year? You're up and running. There's a blank screen in front of me. How many listings am I likely to see on the screen in front of me?
It's a good question.
How many companies trade OTC, and then we take a percentage of those?
Well, I think I can give you a clearer answer to that, simply because we already have indicative commitments from about 9 issuers that have said they'd be keen, subject to us obviously getting a license, and we're in advanced discussions with an additional 2. So, you know, by January, Feb next year, we're aiming to have 10 to 12.
Now, why should they go onto your platform? Because I can bet you, Nicky Newton-King, who's not climbing up on the wall behind me, I don't think, like Spider-Man to come and take us both out, is picking up the phone to those guys and saying, we've got AltX guys, just come and make the move to the JSE. Don't, the story of startups is painful and agonizing. We've been through the pain, we understand how it works. You don't need to go with Etienne, come with us.
That is a compelling argument, Bruce, but you know, what we put on the table is something that is easy to use. We've simplified our listing rules, yet they comply with global best practice from a governance perspective. Our platform is agile, and our settlement model is T+0. So effectively, the JSE settles on T+5.
T+5 mean 5 minutes, 5 days, 5 hours?
T meaning trade date plus 5 working days.
Okay, so, and you would do it immediately?
Correct.
Okay. Now, that's quite a compelling argument. Yes. I hear that as well, especially in the traditional OTC market. There's some mistrust of it, but going into a regulated framework, this adds a level of credibility. Now, 12 companies does not an exchange make. It's a nice start.
Not according to the FSB. You know, if you have one share, you can.
No, fair enough. But when we're talking about running a business here,
sure.
I mean, you're not going to make a living out of 12 companies, are you? Or is there does your business model support that?
It does, yes. We're looking at the restricted market typically. So our business plan is focused around giving corporate SA, once empowered, always empowered, and that's been difficult to achieve in the past 20 years. I mean, what we've seen happen is that companies would create a BE structure, it'll last for 5 or 10 years, and then it'll cease, and the incumbent is left unempowered. So what we're proposing is a model where a large corporate, or any corporate for that matter, would approach us, and we would quite happily list their BE special purpose vehicle, which would then run in perpetuity like a normal share.
Because there's been a big problem there, hasn't there, in terms of many of the sort of the visibility of the BE schemes of Putuma 90 and so many of these schemes, which people have really struggled to get a price on. And people have really struggled to understand the tradability and understand the flexibility or lack thereof of many of these schemes. So there's another line of business for you just there. How much headway, though, do you expect to come up against? How much sort of virulent opposition? Because the JSE, I'm going to whisper at this stage, it doesn't like competition. They've got a very nice monopoly, thank you very much. This upsets the apple cart potentially.
Monopoly is really nice. It's a pleasant position to be in. I don't think we're challenging that monopoly at all, simply because the market that we are targeting cannot be catered for by the JSE. So you mentioned Putuma 90 as an example, and it's a prime example. So they have a requirement where a single shareholder cannot own more than 10% of the issued share capital of that company. Now, the JSE cannot manage that rule, simply because it's such a large exchange.
Sure.
I mean, the market cap exceeds $1.5 trillion. So it's for them to start micromanaging small listings of 1 and 2 and 3 billion rand and start trying to dissect whether or not a shareholder has got in excess of 2, 3 or 5 or 10% is pretty much a nightmare task. And our systems and processes have been designed around exactly that market. So it's tailor-made for this BEE market. As a secondary option, we would look at listing companies that want to create liquidity in their shares, but do not have the appetite for the cost or the levels of compliance that the JSE require. As a trade-off, and we've had a couple of questions around this, and I think I'd just like to put this on the table, is that we, for example, would not allow any short selling or any derivative trades. I mean, you were talking earlier to Sven, and it's quite interesting how derivatives has shaped capital markets globally. And we're trying to move away from that by using a pre-funded, pre-cleared model. So effectively,
It's cash only. You buy what you buy. You hold it for as long as you want. You flog it, you get cash for it, and off you go.
Correct. That obviously de-risks the settlement process dramatically.
Which allows you to do immediate settlement.
Correct. And it limits costs because the level of surveillance that is required is dramatically less. And obviously, to the extent that a company wishes to have massive levels of liquidity and huge pools of capital and lots of derivatives and warrants and options and what have you trading in its shares, then the JSE is your model because they have the systems and the compliance and the regulatory.
Does anybody who's worked at the JSE in the last 5 years, are they on your team? You talk about having a great team. You talk about having people who are really sharp and smart and capable.
No, the team consists of...
So do you know what you're getting yourselves into? Because,
absolutely, yes.
I mean, if you look at the hundreds of people that are employed in this building to keep an eye on dodgy traders and people breaking the rules and all of that sort of stuff, it's a huge, huge responsibility and a huge task.
It is indeed. Obviously, I'm the CEO of ZARX. Our chief risk officer is a chap called Jeff Cook, who used to be head of compliance at Investec Group. And our head of legal is a guy called Graham Wellstead, who is a lawyer by training and also is ex-compliance at Investec.
So you've got compliance people in there, they understand the ways of the world.
Yes.
I mean, good luck with it. People are getting very excited about the fact that there is the potential for an alternative market in South Africa. Will you list ZARX on ZARX in the same way as JSE Limited is listed on the JSE?
Bruce, not in the near term.
Will you raise capital by listing ZARX on the No.
No, that would be a bit twisted. I don't think that'll happen.
Okay, no, just testing his independence. ZARX Chief Executive Etienne Nel, an ambitious guy with an ambitious project. We've seen these projects come and go in the past. This one is at an advanced stage, going through the regulatory process with the Financial Services Board. All being well, it goes live probably by January next year. Thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.